Welcome to Beyond the Chart, Module 2.4. I'm Russell. In the last video, we looked at market makers, the utilities who stand between every buyer and seller. Now let's look at the most diverse group in the market, retail traders. Retail isn't one player, it is several, and they behave differently enough from each other that lumping them together hides more than it explains. Day traders are in and out within minutes or hours, rarely holding overnight. They are reacting to what is happening on the tape right now, not to a thesis about where the company is heading in 6 months. Speed is their entire edge, and it is also their entire risk. A day trader caught holding through a move they didn't plan for has no thesis to fall back on, just a position they need to exit fast. Swing traders hold for days to weeks, trying to catch a specific move rather than a long-term trend. They usually have some kind of thesis, a catalyst they are expecting, a level they think will break, but they are not committed to the company beyond that move. Once the thesis plays out or fails, they are gone either way. Longs, in the longer-term sense, are holding through volatility entirely, closer in patience to an institution than to a day trader. Just without the size or the mandate, they bought because they believe in the underlying business or the structural setup, and a bad week or a bad month does not change that belief on its own. They are the steadiest hand in the room, for better and occasionally for worse, since conviction that doesn't reassess itself can curdle into something else. Bag holders, sometimes called baggies, are not really a strategy at all. They are a state someone ends up in. A bag holder bought, usually nearer a high than they would like to admit, and the position moved against them. Now they are holding, not because of a thesis, but because selling means accepting a loss they are not ready to accept. Hope, denial, and simple inertia all keep a bag holder in a position long after the original reason for buying has stopped applying. This matters more than it might seem, because bag holders are often the very people who eventually capitulate, selling out of exhaustion rather than analysis, and that capitulation is a real, mechanical event with consequences for everyone else still in the stock. We will come back to exactly why later in this course. What unites all of retail across every one of these types is that they are trading their own money, on their own timeline, usually with less information and less patience than an institution, but also with far more flexibility. No mandate restricting what they can buy, no requirement to work an order in slowly. Retail collectively moves real size in the right stock at the right time, and because individual retail decisions tend to be made faster and on shorter information than institutional ones, retail-heavy stocks can move sharply on comparatively modest news. Now let's talk about catalysts. A catalyst is an event that forces a revaluation. It gives the market a reason to stop agreeing on the current price and start disagreeing again, which from Module 1 is the only thing that makes a trade happen at all. Earnings, a regulatory decision, a contract win, a macro data print. All catalysts in the generic sense. Something happens, and people who were comfortable with the old price suddenly aren't. Each player reacts to a catalyst on their own terms. A short seller's borrow fee, quietly paid for weeks, becomes urgent the moment a catalyst threatens to move price against them fast. An institution working a slow order might pause it entirely until the catalyst has passed and the picture is clearer. Retail tends to react fastest of all, for better and worse. Catalysts matter for more than timing alone. A catalyst is often what breaks a barcode, the spark that turns a trapped short's slow, quiet tightening into an urgent problem they can no longer manage patiently. We will come back to exactly how in Module 7. In the next module, we will look at position sizing and risk, staying in the game long enough for any of this to matter. The full course is on School, all the modules and the community. Link in the description. If this resonates, please like and subscribe. It helps more traders find their way here. The Lark cycle is the destination, the journey starts here.